Thank you for joining the Northern Miner here at the annual PDAC convention in Toronto. The Canadian junior finance landscape faces significant uncertainty. Here to break down some key issues for us is Kendra Johnston, the Managing Director, and Ron Birnbaum, CEO of Toronto-based finance house PearTree Financial. Thanks for joining me.
Well, thanks for having us.
All right.
Pleasure.
So I think one of the most topical issues at the PDAC this week has been the intention signaled on Sunday by the federal government that it plans to renew for 2 years the mineral exploration tax credit. However, Parliament is currently prorogued. They don't have a legal avenue to actually enforce that or put that in place. What do you make of this uncertainty, Kendra?
Yeah. Well, I think first off, we were really happy to see that the mineral exploration tax credit, that there was an announcement about it, that they were going to continue for an additional 2 years. That's great. That aligns the mineral exploration tax credit from an expiry date perspective with the critical mineral exploration tax credit. So adds a little bit of certainty from that perspective for the next 2 years, which is great. However, it's still uncertainty. We still would like to see both of those tax credits made permanent going forward. Government is prorogued right now, so they do require the mineral exploration requires a legislative change to enforce that 2-year time frame. But I think what we're seeing and what we're hearing on the ground is a lot of support from all political parties. So we are hopeful that everybody will support it and that that legislative change will come in due course.
Could you perhaps venture a guess as to why government would feel loath to make that a permanent tax credit?
I think it's been a really good thing for our industry over the last just over 20 years now, almost 25 years that they've been renewing it almost annually, with a couple years where there's been a 5-year renewal. At this point, it's something that industry really counts on, and so it's a part of government policy at this point. So. I think from my perspective, there is no reason to not make it permanent. It's a perfectly reasonable thing to be asking for and for this industry to be pushing for.
Yeah, okay, fair enough. So the other big topic today at the PDAC floor is the tariffs that the US levied on us as Canadians, blanket tariffs, 25% on everything we export. Now, it's not directly impacting junior explorers necessarily, but Ron, how would you view the read-through eventually impacting juniors and the finance landscape there?
Well, firstly, the junior market is populated by companies that have a time horizon of 8 to 20 years. So this too shall pass, and by the time the resource is proven out sufficient to warrant an investment in building a mine, I think the juniors won't be affected at all, except in the short term. Obviously the whole stock market is down, Canadian dollar is down. Both those things depend. It's seen through an optimistic lens. Canadian dollar is down, but the resources we're looking for are always priced in American dollars. So drilling is down. Drilling costs are in Canadian dollars, whereas the product that comes out of the ground is priced in American dollars. So that gives us some currency leverage in what we do. It makes it a cheaper place in a very rational, very well-governed country. The other piece is for investors. It's counterintuitive, but I've been doing this for about almost 20 years now, and I remember being advised early on that junior exploration is just another real estate sector. It really is. You add value, you prove something out, you then sell it to an entity that can actually build something and extract the ore. The real money made in every cycle is when things are down. So if you can buy the real estate at 22 cents a share instead of 65 cents a share, then I'm hopeful that people will recognize that. And actually, if you like the shares at 65 cents, you'll love the shares at 22 cents. The resource is there, assuming you buy into the story and you actually have done the diligence. So I think that's a great. I think we may see, counterintuitively, we may see more investment. And then the challenge for all of us is to find customers for our exports other than the United States.
Right. Yeah, very valid points. And it's good to have a bit of a different perspective on the matter. Moving on to one of the other key kind of policy things that PearTree has been advocating very loudly for over the past year plus has been the alternative minimum tax and changes that that took place in that area. Can you please remind our viewers, what really was the issue there and what's the update? Has anything changed in a way that you would have liked it to?
Shall I take that one? So, there are two things. One is that the flow-through regime in Canada is the largest single source of capital in Canada. I mean, it's the way these transactions are done. It's merely, under the flow-through regime that's been around since the late 70s, early 80s. Subscribers buy flow-through shares where the issuer is flowing through or renouncing their deductions and additional credits, basically reducing the after-tax cost of ownership. We add another element where our clients are buying those shares not for investment purposes, but for their tax value then donated in an arrangement that's been around since 2007, once the CRA signed off with us. That's the Canada Revenue Agency, with the end buyers being outside the country. The bigger the package of tax value, the more you can access those tax value for that subscriber, the greater that spread between what we can pay for the shares and what they can be donated and then sold to the institutions that actually want to take the positions at a reduced cost stripped of tax value. Alternative minimum tax has been around since 1986 in Canada. It basically says you're entitled to all these deductions and incentives in the Income Tax Act that are legitimate, but you can't drive your income to nil in any 1 year because we the government, have cash flow needs. So therefore, there's an alternative calculation which backs out a lot of the expenses, or many of the expenses, from interest carrying costs through to childcare in some instances, and including exploration expenses. The government of Canada 2 years ago announced a change in AMT, which was ill-structured, basically including donation of shares where they were going to disallow half the credit, and also an increase in the add back of the exploration expense when doing that alternative calculation. So you just can't access, that first subscriber cannot access all the deductions and credits. And so we saw a significant reduction in people's ability to buy flow-through shares last year in 2024 when it first brought in, made even worse by that horrible tax policy of increasing the capital gains inclusion rate, where flow-through shares are particularly exposed because a share bought at $1, you write off $1, but for tax purposes, it's as if you paid nil. So the tax policy, probably those two things, especially in tandem in 2023, probably cost the sector conservatively $250 million and maybe $350 million in accretive job creation in northern and remote communities.
Right.
They've walked back the capital gains inclusion rate, which it won't be back on the table, but it didn't help us for last year. The AMT rules were changed. We identified for government that there was actually a mistake in their drafting, and they did seek to remedy that mistake and to offset some of the impacts of the increased capital gains inclusion rate. Unfortunately, those changes were put out in the August 12 draft legislation, which also hasn't been passed. So there's still uncertainty.
Right.
And this uncertainty will continue, layered on top of all the other uncertainty that's going on in the world.
Yes, certainly a lot of uncertainty happening. And it all kind of sounds to me like it creates a more dire junior financing market. People are complaining that they're not getting access to the funds they need. And so I guess that's exactly what we're talking about. Kendra, what are some of the other key trends and issues in the junior space that you are following at the moment and paying close attention to?
I think we're always looking at where the projects are that are really exciting and creating a buzz across the country. We're also looking at how the projects that are based here are comparing to other places around the world, and sort of where that flow of funds is coming from. But there's a number of from a policy perspective, a number of issues that we're following quite closely, whether that's AMT and capital gains, the mineral exploration tax credits being extended and when they're going to expire. We're also looking at things like eligibility under Canadian exploration expenditures. There's some changes I think we would all say are required there. There's now a gap in between Canadian exploration expenditures and Canadian development expenditures that we'd like to see closed. So there's a variety of policy issues that we're looking at, not only from a federal perspective, but also from the provincial, territorial perspective as well.
Would you care to share some of the perspectives and opinions that you are gathering here on the exhibition floors? What's the mood like for you this year here at PDAC? Both of you could
Kendra,
answer
you want to start that?
I'm actually a little bit surprised. With the uncertainty that we've heard around tariffs and all that stuff happening this week, I expected it to be a little sadder and more dismal than it is, but it's not. It's actually been relatively positive. It's a good mood down there. Yes, there's a huge challenge in trying to find financing. The retail market is no longer really in existence anymore. And so it's a challenge to find the global investors, and certainly those big names that you hear about that can really invest significant amounts of funds. Everybody's going to them, and they of course only have so many dollars. So the challenge in trying to attract a buyer like that is significant for the juniors. It's a really hard thing to do, but there's a lot of conversation about M&A activity and the need for M&A activity in the junior space. So, but overall, it's been a really positive mood, optimistic, as every junior explorer always is optimistic. Even in the worst of times, they're really quite positive on where we can go. So this year is no different. It's there's definitely light at the end of the tunnel that people are seeing.
Nice. Any observations from you, Ron?
If I can add to that a little bit, and that is, we represent almost half of all the flow-through shares being issued. I mean, our clients buy almost half of all the shares issued in any 1 year. It's about $500 million. But up until 2022, beginning of 2022, probably 90% of that, admittedly was a smaller number as the business grew, was precious metals. Maybe iron ore once in a while, but generally it was gold, right? Silver, platinum, maybe, but largely some copper. But generally, it wasn't critical minerals. So we're very fortunate, and I think that's probably the foundation of the optimism, in that there are lots of entities, companies, governments coming to Toronto, coming to PDAC, and saying, we want to buy, copper. We want to buy rare earths. Please help us out. Yesterday there was yesterday meaning today's Tuesday, Monday. I'm not sure anymore. There was a seminar put on, a panel discussion put on at Torrey's, the law firm, and they had three people from the U.S., two of which really represented the government of the United States. They received a polite reception, but they were waving a checkbook literally in the tens, maybe hundreds of millions of dollars, where they stated very directly, we want to make investments, we want to buy offtake, we want to secure supply, quote unquote, from our allies. Everybody rolled their eyes. All the Canadians in the room certainly rolled their eyes on the word being characterized as allies. I don't think we all feel that at the moment, but this too shall pass, hopefully.
Yes. Okay. Point taken. Perhaps for those viewers who are not that familiar with PearTree, we've spoken a lot about some of the key issues you deal with. But just remind us again, who would specifically consider making use of your services, and what is your specialization indeed?
So, want me to do this?
Sure.
Okay, so look, PearTree runs two businesses in tandem. One that faces the mining resource sector, where we represent, again, about half of all the flow through in the country. In that area, in that area, our value add, and the joke is, we buy high and sell low. Where, for example, probably the best example is the Cisco mining now sold to Goldfields. Over the past 5 or 6 years, we've advanced to that one entity, OSK, and to about $450 million. And most all the deals were done where our clients bought the shares for, say, $1.50, even though it traded different, but it's easy to do the math, where those shares were then immediately accessed the tax value by our clients, donated a moment after subscription, and immediately sold in a bought deal run typically by Canaccord, where the shares were then sold stripped of tax value for 85 cents, about a 15% discount to market. So we're able to risk adjust the investment in Canada by the mining community globally and basically access Canadian tax incentives once removed. The real negotiation is between the issuer and bankers, right? If a share is trading at a dollar, we could do a deal at say $1.50 for easy numbers and sell at $1, or we could do the deal right at market at $1 and sell at $1 divided by 1.5, and then we're selling shares at 66 2/3 cents. From our perspective, from our donor client perspective, we're indifferent as long as that ratio remains the same. But for a weaker company, it means they can offer a significant discount to market whilst minimizing their dilution, because they're always going to get a premium to market. We work alongside the brokerage community because we get paid by our clients like any fund manager. On the donation side, it's an individual who otherwise wants to reduce his or her after-tax cost of giving, because when the shares are donated to charity in this format, they're accessing two sets of deductions, and the cost of giving goes from 50 cents on the dollar down to less than 10 cents. And so on the donor side, we commoditize donations. If it's cheap, if you're in the market to give away money and you're otherwise taxable, you'll give away more in this fashion. And that's been our experience over the last 15, 17 years.
Fascinating.
So realizing that the audience that this is going out to is primarily global, I do believe. The issuers that we work with can be based anywhere in the world. They all have projects based in Canada. So that's the key feature of being on the issuer side. We also work quite closely with a number of the strategics that are out there, because they are coming in as back-end buyers for the most part. And so that relationship is really important to us as well. And then, to Ron's point, we are running two sides of the business. So we also have the pleasure of working with a number of wonderful charities out there and donors. So that's what makes it really fun.
And just adding to the Kendra comment for a moment, we've done perhaps close to 30 transactions on the ASX. So an issuer that is not located in Canada, but has a Canadian project. So it's where the use of funds are deployed. So if they're deployed in Canada, we can do a flow-through offering on the ASX or any other major exchange in the world. Under Canadian tax law, they're all accepted. Where a global issuer can then access the reduced cost of capital through our format, as long as that exploration activity is being done in Canada.
Okay, that's very interesting, especially for an industry that's capital starved. So any avenue is worth exploring, pardon the pun. For those of our international viewers, how can they access your services? How can they get more information from you?
Yeah, the best place to go is our website, PearTreeCanada.com. We've got explainer videos on what we do on there in multiple languages. So certainly encourage people to go there to fully grasp and understand what the structure is all about. Lots of information up there as well around some of the work that we do, some of the lobbying efforts that we've had. And there's contact information for all of our team members on the website as well.
All right. That was PearTree Financial's Managing Director, Kendra Johnston, and the CEO, Ron Birnbaum. Thank you very much for making time to join me.
Thank you for having us.